Hello, I'm your host, John Cavendish, and welcome to the Amazon Strategist Show. The show that's all strategy with no hacks, no silver bullets, and no magic pills, just real practical strategies for your Amazon business. So today, I'm very lucky to be joined by Rohit Nair, who is a serial entrepreneur with multiple exits in the health and wellness space, e-commerce space, and consumer technology products. He's passionate about insurance for e-commerce businesses, insurance distribution through client digital channels, financial management, customer acquisition, legal and regulatory environments, and high-growth ventures. One of the most impressive LinkedIn profiles I've seen in a long time. So, without further ado, let me welcome Rohit.
Thanks for having me, John. It's a real pleasure to be here.
Thanks for being here, and really nice to talk to someone who's based in the UK. Usually I'm talking to Americans in a weird time zone compared to where I am.
Well, the UK move was sort of 2016, 2017. And prior to that, the US, India, I've been around.
So this is slightly off topic. Let's go 2 minutes in this. Like, what made you move to the UK?
So mostly it was, we're running Amazon businesses. And at the time we were looking to move to, let's call it a G20 country that had access to Seller Central, because, in India you can't do it. In other countries it was difficult at the time. So we made a decision to move to the UK because the tax rate was favorable. And so I was traveling around the UK trying to find a city to be based in, and landed in Bristol, loved the place, met my wife on the first night I was here. And that the rest is history.
Oh, that's amazing. First night in the city. She got you locked down.
First night in the city, and she got the business to Bristol. And so I think, the city of Bristol should be giving her some kind of, compensation for bringing jobs into the city, I guess.
Do you have many team members in Bristol?
Well, I've sold a few businesses. So while we were sort of on our peak, we had about 12 people in Bristol.
Oh, that's cool.
And I sold that to a private equity firm.
Oh, amazing. So you were doing e-commerce, you sold a tech startup. Like, why did you decide to move into insurance after that?
So while I was doing e-commerce, there was a brand that we were running 80-90% on Amazon. And Amazon makes it mandatory to have insurance. And so I went around trying to buy insurance. Really, really painful, because every single insurer we spoke to asked us to project our sales for the next 12 months. Now, with, out of stock situations, suspensions, delistings, you don't really know what to project. And so you just come up with a number. And, when you come up with a number, insurance is priced based on that, which is 100% of the time incorrect, right? There's just no way that you can know what the future holds, and you're always sort of overpaying for insurance, or you're underinsured. If you say you're going to do 5 million in sales and you end up doing 4, you overpaid for insurance. And if you say that you're going to do 5 and you end up doing 6, you've had a great Prime Day or whatever it is, and the last 1 million is uninsured. And so this whole sort of this confusion around what to write on a form. By the way, writing forms, insurance forms, pain in the ass. So anyway, I came up with a number, and that year we were projected to do sort of 30 million in sales on Amazon. And so I said 30 million, told the insurer, and they gave me a quote of about £75,000, which is about $100,000. Payable upfront annually in advance. You can't pay monthly, or you get premium financing. And the way interest rates are now, it's probably between 11 and 25% on top for premium financing. Anyway, so we had a suspension event happen on Amazon. Revenues considerably dropped. By the time we got back up, it took a while. And so I went back to the insurer and I said, hey, I didn't do 30 million. Can I get a refund? And the insurer says, well, it's not my problem. It's not my fault you didn't hit your targets. And that really, really upset me, because they weren't willing to give us a refund in a year that we were struggling for cash flow because of suspension. And I actually just said, do you know what? I'm going to do this better than you can. And that's why I launched a shortfall, because there's a mandatory product. Amazon requires it. Walmart requires it. This is Walmart.com. And, it's just not fair. The way the insurance industry works is just not fair. And so I wanted to build something that I would buy as a seller, and that is completely dedicated and focused on e-commerce, right? And so that's why I launched a shortfall and built a shortfall.
I love it. And yeah, I mean, I would identify with that as well. I was a seller for many years, and getting insurance for me was such a pain. Like trying to get the right kind of insurance, the type of product insurance I wanted, the markets I wanted to sell in. They wouldn't let me sell in the US. It was so painful.
Absolutely. Yeah. I mean, US insurers, all of them don't like private label products, don't like products imported, definitely don't like products made in China. And, all of these are products that the vast majority of FBA is products imported or something, private label. And so what they tend to do is they just say, no. And when you get several rejections, you're typically going through a broker or filling out forms online. And it is just a painful, painful process. All the while, Amazon is sending emails saying, you've crossed the $10,000 threshold. You must have insurance. We'll suspend you. We'll delist you. It's just really, panic-inducing, for the lack of a better word, because, for the vast majority of sellers, this is their primary source of income at Amazon, and Amazon just has so much power over you. And so that fear is what we wanted to mitigate. And so what we did at a shortfall is we'll cover private label products right out of the box. We'll cover imported products. We'll cover products made in China. European insurers don't like any sales in the US, and that's the way in the rest of the world as well. But we will cover products made, being sold in the US as well. So our objective is to cover sort of 90 to 95% of all products sold on Amazon, in comparison to other large insurers who are doing sort of 20, 25%. They just don't like it. Because product liability is one of those things where loss ratios, and I'm getting into a bit of insurance jargon here, but loss ratios are just so high, especially when you're selling in the US. So how do you build a product that is has lower loss ratios while at the same time being cost effective for the third party seller? Because nobody wants to be paying for insurance. It's just one of those things that I'd rather focus on my business than be, battling insurance companies for discounts and stuff. And so with the shortfall, what we built is we built a product that is fully compliant with Amazon. They have quirky conditions in terms of what the deductible needs to be, what the limits need to be. We're fully compliant with Walmart as well. But we're monthly billed based on the last 30 days of your actual sales, right? And so unlike other insurers where they're asking you to project and coming up with these stupid random numbers, we're basing it on actual numbers. And so with that, how do you get cost efficiencies, right? So the vast majority, everybody in the insurance industry looks at consumer products into one of sort of 50 or 60 SIC codes in Europe or NAIC codes in the US. And so what we said is, just say, for example, you're selling, steering wheel covers, right, on your car. That, for all other insurers, would sit in automotive accessories as one product, right? Within automotive accessories, you could get spark plugs, you could get batteries, you could get hubcaps. There's all kinds of things. And so they cumulatively look at the rate, the loss, the risk, and they assign a risk rating to your steering wheel covers, right? Which is insane. But that's just how it's been done for the last 400 years. And so what we do is that we go into absolute detail, right? And so we're tracking sort of 32,000 product categories in real time. And we're analyzing risk on the basis of 32,000 product categories and not just, 20 or 100 SIG codes. So huge differences. And that's where we're able to sort of bring down the cost of insurance. For example, our minimum premium is $26 a month, right? Compared to, a large US insurer who is charging $600 a year minimum. This is if you're selling, $100 worth of books a month, super low risk. You're still paying $600 a year in insurance. And we just, decided let's just make this fair and bring down the cost of insurance for third-party sellers on Amazon, Walmart, and marketplace sellers. Even if you're selling wholesale channels, other retail channels, we cover 100% of the sales.
Interesting. That's super interesting. So, yeah, for example, on risk, if you're tracking 32,000 products, how do you assess the risk on like a steering wheel cover? And what are they kind of playing in the background, tracking keywords, like if people slipping over and strangling themselves with it?
Pretty much. So what we do is we track prior claims, right? So for the entire industry, for every single product, we've built sort of natural language processing algorithms to rate and price insurance in real time by looking at the risk of certain products, right? So take, for example, headphones, right? So wireless headphones are one of those things where there's lithium-ion batteries in them. They can overheat, and therefore there is a risk of, bodily injury, right? And it's not just bodily injury, but then you also have the issues around, the case essentially overheating. And when the case overheats, it might burn a desk or something like that. So we look at all of these factors, and we're not just lumping it into electronics as a category, which also includes lithium ion, like these sort of power bank things. But we're doing it on the basis of headphones. How many headphones claims have come in? Wireless headphones claims. And it's not just wireless headphones, but what kind of batteries are in them. And so with the sort of analysis that we're doing, and we're doing tons of sort of artificial intelligence based calculation of risk, we're able to do all of this sort of in the background while the customer is, or the Amazon seller is just filling out a form. All of this cool stuff is happening in the background to analyze a specific product, where it's made, what materials are used, what the star ratings are on Amazon. There's all kinds of things that we look at, about 400 different sort of line items that we look at to analyze risk, all in real time, all in the background.
That's amazing. That's super, super cool. So what level of cover does Amazon need you to have? And also, I suppose from that, like, is that enough cover, or should there be something that you should take as well as what Amazon needs you to have?
Sure. So one thing that we do is that we don't, unlike every other insurer where they try and add on limits to make more money, we don't do that. So we just say, where are you selling? Are you selling on Amazon? Amazon needs you to have $1 million per occurrence and per $1 million in the aggregate, right? That's Amazon's requirement. Walmart requires 1 million per occurrence and 2 million in the aggregate. So if you're selling on Amazon and Walmart, then you need $2 million, right? Now, we come across customers all the time who have, they're selling a benign product. I can't name specifics, but assume something that cannot hurt anybody, not even a fly. And the insurers have given them 7 million in limits, which essentially sort of doubles or triples their rate of insurance, because the insurers are very happy to put out larger limits to third-party sellers who have no prior claims and are extremely unlikely to have a claim in the future, because they get a ton of money and all of that just sits in, as on the balance sheet as profit almost. So we don't do that. We just say, do you need $1 million? Do you need $2 million based on where you're selling? However, if you are selling a higher risk product, then you might want to get, 3, 4, or 5 million in the aggregate. And we're, natively we're able to do that. So on our product, you can use a slider scale and say, I want $1 million. And we say, Amazon wants $1 million, Walmart wants 2, but you can choose 3, 4, or 5 as well on a slider scale. So yeah, we've got that available. Most people would just want what the marketplace requires, right?
Yeah, that makes sense. And I guess, I don't know if you can share this information. I'm just super interested. Like, what percentage of your clients ever make a claim?
So about 40% will make a claim at some point, right?
Wow, 40%.
Yeah. So we work towards sort of a 40 to 60% loss ratio. And so we're okay with it because the vast majority of the claims, so we settle claims almost instantaneously. The vast majority of claims are, people who are like property damage, right? And so if you, again, with the case of the Amazon, with the wireless headphone thing, and it overheats and burns your desk, the end customer wants a replacement, at the very least. And so we will kind of settle those claims immediately. To add to that, Amazon has something called the A to Z guarantee. And Amazon will settle the claims as long as you have compliant liability insurance up to $1,000, right? Amazon will pay. And this is typically property damage up to $1,000. Amazon will pay it. So you don't even have to come to us. Amazon informs us about it, and the third-party seller, but we don't necessarily have to make a payment on up to $1,000. So that's a good thing from Amazon, what they've done.
Yeah. Does that mean they're covering it from their policy and just telling you about it?
They are, yes. Yeah, they are. That's the A to Z guarantee.
Wow. I didn't know that, but I really didn't know it was that high. Like, I didn't know property damage was that high from products. 40% of policies have claims. Like, I guess that's why they make everyone have insurance. I don't know anyone that's ever been claimed against.
That's the thing, right? So a lot of people, when you sell a product online, you don't really expect the end customers and the person who bought it on Amazon to have an issue. Take, for instance, there's a case we were looking at recently where somebody is selling a product which is sort of a skincare product on Amazon. And their customers, the end customer, burnt themselves on an electric radiator, right? And so then they applied the skincare product to soothe the burn. It's not the intended use of the product, but they had a reaction to it, and they were claiming $1 million for it, right? So against the skincare brand.
That's the US.
Yes, in the US, it's a high liability environment.
Yeah.
Right, and so with that, and with these sorts of things, claims come up, which may not necessarily be factual or accurate, but it's very cheap to put in a claim. There's, when you drive around Vegas or any major city in America, you'll just see, sort of injured, contact so-and-so, attorneys will sort it out for you. That's because it costs them nothing. It's a no-win, no-fee scenario. The attorney takes 40% of the settlement, and it just comes to the insurer to pay. So it happens all the time. It's not necessarily because it's the fault of the product or the fault of the seller, but Amazon requires it to protect themselves, right? Because they're named as an additional insured on every single policy that we put out. And so when the lawsuit comes through, they will invariably name Amazon on it, because where did you buy the product? I bought it on Amazon. Let's name Amazon because they're the big company, not John's skincare products, right? And so that's why Amazon requires it, and that's why they make it mandatory.
That's really interesting. I didn't know the claims were so high. So if people don't buy from yourself and buy from somewhere else, is there any danger of getting a policy that doesn't comply with what Amazon wants you to have?
Yes. Well, I'm not saying that we're the only ones in the market. Obviously, there are other people out there. But the insurer, Amazon has specific requirements on their certificates of insurance. They want a one-pager. They want to be notified in the event of cancellation, modification, non-renewal. They want to be, the limit has to be capped out at $10,000. Well, deductible has to be capped at $10,000, regardless of the size of seller, right? So you might be selling $100 million on Amazon, or you might be,
$10,000 excess, and they still want to have a $10,000 excess rather than like $50,000.
$10,000, exactly. Typically, it's $50,000. The minute that you cross sort of 10 million in sales, the insurers, will put out a $50,000 deductible. But Amazon requires it to be $10,000, right? The certificate has to be in a certain format. It has to name, there's certain things that need to be on there, which is why compliance with Amazon. I mean, we've had a seller come to us recently who bought a policy, sent it to Amazon, and Amazon, a month later came back and said, this is non-compliant. You need to give us another certificate of insurance and buy another insurance policy. And at this point, because you're paying annually in advance, there is, when you want to cancel your insurance with someone else, because you need to go and buy somewhere else, there's something called earned premium. So the insurer takes away a huge chunk of the premium that you've already paid and calls it earned and gives you a tiny refund back. And so, but Amazon, if you were to do it in the first 14 days, it wouldn't be that much of a problem. 14 days to 30 days, they'll take sort of 7 to 10% of your premium right off the top. But because Amazon takes a while to come back to you and say that, this is wrong, by then a chunk of it is already earned premium. And so it is painful for sellers, right? To have to go and buy insurance again. Now, I want to caveat by saying we're not the only ones who are compliant with Amazon. There are other people who are compliant with Amazon, and you should go and get the best possible quote. And the reason I say that is because we're so confident of our pricing. We're sort of up to 75% more cost effective than any other insurer in the US, right? Similar A-rated insurers. Now, I also want to say that we have sort of A-rated capacity, which is backed 100% by Lloyd's of London. 330-year-old, behemoth. And when everyone was refusing to pay for San Francisco fires in the, 1700s or 1800s, Lloyd's paid. Lloyd's always pays. Nice. And so everyone knows Lloyd's of London, and, we're a cover holder at Lloyd's. And so, yeah, we're very proud of that and what we've achieved.
I love it. Super cool. And it's clearly needed, what you're providing, and required. So both needed and required makes for an amazing business. Just need to market it.
Absolutely. I mean, sellers need to know that we exist, that we're not trying to build something that is super cash grabby profitable like other insurers, right? We're very, very focused on trying to make sure that we're able to support third-party sellers in building their business and protecting them in the event something goes wrong. And yes, it is important that Amazon and Walmart and other marketplaces make insurance our product, like commercial general liability, product liability insurance mandatory.
Yeah. So with Amazon's current process, because personally, we serve a lot of clients, but we help them usually after this stage. When does Amazon require the certificate, and what kind of time frame do they give you to get to submit that?
Sure. So the minute that you cross $10,000 in sales in 1 month, you must provide a certificate of insurance to Amazon. They give you up to 30 days to go and get a quote. They will refer you to their insurance accelerator, where, there's a couple of comparison websites on there. And so what you need is you have 30 days, right, to provide a valid certificate of insurance that is compliant with Amazon. However, Amazon keeps dropping the threshold amount, right? So when they started off, it was trailing 12 months, $1 million in sales. Then they dropped it to trailing 12 months, 100K in sales, which is where Walmart is today, right? And then they said, you need $5,000 of sales for 3 consecutive months. Now they've made it $10,000 in 1 month. When they say $10,000 in 1 month, that could be sort of Black Friday, Prime Day, any kind of spike in sales. At that point on, you must have insurance. And so that's the kind of thresholds that exist today. We are aware that Amazon is looking to drop that again, and that might be coming soon.
Yeah, good for business. And as long as you can generate these certificates, I mean, if someone's starting out and it's $26 a month, that's not a crazy barrier to entry as well. You're helping people be able to still start their business without buying $600 worth of insurance up front.
Absolutely. Or getting premium financing and paying it monthly, which could add on up to 25% on top of $600. $600 is the lowest that we've seen for a comparable A-rated insurer. We've seen numbers as high as sort of $1,500, $1,600. When you're making, a business of $100K a year, of $75K a year, it's just painful to pay that much.
Yeah, especially for startups who just want to give it a go, it's another barrier to people's mindset of even if they do the payment plan with 25% interest, they're still on the hook. They still have to pay the money, it's just paying it monthly.
Absolutely. You still have to pay to the premium financing company.
Yeah. I'm sure they'll chase you until the end of time.
Pretty much, or ruin your credit. So, But what we do is we're natively monthly billed, right? And so
Yeah.
if you cancel, you can cancel at any time. We price it based on, like I said, your last 30 days of actual sales. So, you have a spike month, it goes up a bit, your revenue drops, suspension, delisting, the container ship is stuck in the Suez Canal, there's a queue at the port of Long Beach and you can't get inventory into FBA. It just drops down to $26 or thereabouts based on the product you sell.
Love it. Thank you. Is there anything else I should be asking you about insurance?
Well, with regard to product liability insurance, I think you've covered off the key points. But insurance is just one of those things. I mean, it's a massive industry, and because I came from the outside, as an e-commerce guy, 5 brands, sold all of them to private equity and aggregators and other Amazon sellers, and so for me, it was a huge learning curve, right, in terms of figuring out insurance in the insurance industry, and so now I feel sort of like an expert. But I've got a great team, behind me. Who've been, 50 years, 40 years in the insurance industry. And so if you have any questions about insurance, get in touch. I'll be happy to answer.
Well, at the end, we'll go contact details so anyone else can reach out. I love learning about new things, and I feel like super interesting, One of the oldest businesses out there, isn't it? What's it, Warren Buffett? He has one of those specialist insurance companies, doesn't he? They insure stuff that nobody else in the world will insure through their own data.
Well, Lloyd's does insurance that nobody else will insure. Right. I mean, J-Lo's butt was one of the examples, right? And so that was insured there.
Was that a marketing stunt there, or was that?
No, well, that was a legitimate thing. I mean, I think it was athletes, they insure their knees at Lloyd's, etc. Warren Buffett's Berkshire Hathaway is predominantly an insurance company, right? And so all the revenues that come in, that's from insurance, is what he uses to make acquisitions and be is he the Wizard of Omaha or
Oracle?
The Oracle of Omaha. That's right. Yeah. He's the Oracle. And that's because of Berkshire Hathaway, which is a insurance company predominantly. And they own Geico, which is a very famous brand in America.
Right.
So as of now, and I'm not sure when this is airing, but Assureful is national in the US. And so it's a highly regulated industry, and we're regulated state by state. And so we can cover all, and this is in April of 2023. Very soon we'll be in the UK as well, and following that, Europe and Hong Kong. So that's our sort of plan. As of now, sellers who are headquartered in the US or say that they're headquartered in the US, Assureful can cover them nationally in the US.
Okay, it's perfect. Yes, that's actually a very good point. So US for now, then the UK, then Europe and Hong Kong.
That's right.
Nice. Awesome.
And also Canada and Australia, New Zealand may follow soon, but this is the key targets that we have as of now.
No, I agree. I think that probably covers 90-something+% of sellers that I know. Hong Kong's a good base, Europe's a good base, and so is the US. I saw an interview with Warren Buffett a few days ago when he was talking about him living in Omaha. And he's like, my neighborhood's in upper middle class neighborhood with a decent average income. I mean, I live there, so that brings up the average income a little bit.
Yes, probably brings up by at least $10,000 at the very least per household.
Per household, yeah, probably more.
Probably more.
Funny though, only as him and Charlie Munger can say is like. I'll tell you about it later. There's some really interesting stuff that, like, when they interview, like, only multi-billionaires can make certain statements, can't they?
Absolutely. And Amazon sellers it's one of those markets where you can actually do anything, so you can build a massive business if you're compliant and stay within their framework, because they will suspend you and they will delist you, and then that's the business gone.
Oh, for sure. And with relatively small teams, almost like SaaS level teams. I've got friends who sold businesses for 8 figures with a team of 6, or doing, 30 million with a team of 50, which is amazing.
Yeah. We sold, so one of my brands that I sold to a private equity firm, we had a team of 14 in there, mostly contractors, right? And that was doing about 30 million in sales on Amazon.
That's amazing, isn't it? Because you don't need all of these other parts,
No,
all these
of
other
course.
parts which are out.
Yeah. And a
I love it.
25% net margin, right? I mean, you can really build a super profitable business if you do it right.
Yeah, I love it. Super cool. And yeah, it's an amazing opportunity still for people. I still see people getting in, still having good products, still making money. You just need a bit more to get going and make sure that you're really solid on your product and your idea.
Absolutely. And, it's one of those ecosystems where if you figure out the formula and do it right,
Right.
it's sort of just, it's a cash cow, right?
Yeah.
Yeah.
Makes me want to go back and start the Amazon business.
I
All
know, right?
So next we have the game show part of our show. So we always want to give back to our listeners and watchers. So if you are watching, listening to this, whatever platform, there will be a link either below here or in the show description where you can enter for this competition. And if you enter, you will be entered every week for every week's episode, and a chance to win everything going forward. So Rohit has very kindly put forward our first ever physical prize. It's always been not emotional. That sounds a bit too much, doesn't it? It's always been digital in the past, whether it's cash money or whether it's time with founders. Rohit has put forward a MacBook Air. So thank you, Rohit. It's going to be very, very cool watching someone win that. So we also have a 30-minute consultation with Don from AccrueMe. We have 1 month of mastermind membership with Amazing FBA. We have a call with Bryant Burt of Canopy Management. We have $500 worth of bookkeeping credits with Ecom Balance. We have all sorts of amazing prizes on the wheel, which will be coming up in a minute. So, producer, if you want to bring up the wheel. There's the wheel. All right, so Rohit, you have control. You have to say spin that wheel and it will magically spin and music will be post-edited.
Spin that wheel.
And we have a frame rate problem with the wheel. Eva, so 10% off first month service with Eva. That's amazing. So we'll connect you with Rob Runyon from Eva. And do you want to do another spin, Rohit?
Sure. Spin that wheel.
Yeah, it's a little bit faster. What is it? Online seller solution. So a free account audit from Vanessa Hung. So yeah, we'll be introducing you to Vanessa. She's a lovely person, one of my favorite people. And do you want to do one more?
Sure, go for it. Spin that wheel.
And Seller Snap. Okay. So Seller Snap has an amazing repricer, 1 month of free repricing. I would probably combine that with checking out Chris Grant's Online Arbitrage OA Challenge, which is also on the wheel. If you're looking to get into any kind of online arbitrage, side hustle, side money, to be honest. If you're selling on Amazon and you've got free time, OA can be a good way of adding some revenue. It's probably not going to make you the 30 million, but it's going to potentially add some nice money to your pocket. Okay, so Rohit, thank you so much. You're an amazing assistant stroke games master then. So we always ask one question to all of our guests, which is, what is one strategic element that you think people are missing while selling on Amazon?
I think there's a lot of focus on how to grow the business, but very little focus on how to stay compliant. The minute that you get suspended or delisted, growing the business goes out the window. And I'm speaking from personal experience. Compliance with Amazon's ever-changing terms and conditions, compliance with all the marketplaces that you're on is super, super, super important. So I think that's one thing, one strategy that has to come natively to people. And again, I'm speaking from personal experience here. The heartache and the pain and the sleepless nights for lack of compliance or a suspension or a delisting, it's something you don't want to experience. And if you have experienced it, compliance at the top of everyone's mind. It should be at the top of everyone's minds.
No one's ever said that before. So thank you for sharing. And also, I totally agree. Like at least two of my friends with 8-figure Amazon businesses both have a compliance person on their team, just ensuring compliance.
Absolutely. It's so, so, so important. And buy insurance. Yes.
And buy insurance. Insert a shortfall underneath in the bottom. Post-processing. Post-production. Okay, thank you so much. So now we have our last section, which is the rapid fire questions. These are very complicated, not very complicated. Just quick answer questions, and we'll do some nice editing afterwards. So, are you ready? This is your life.
Go for it.
All right, question number 1. What is your favorite Amazon niche?
Supplements.
If you could choose no pictures or no reviews, which would you pick?
No reviews.
Name a country that starts with the letter R.
Rwanda.
Which Amazon marketplace is the next big opportunity?
UK.
Pineapple on pizza. Yes or no?
No. God, no. What an atrocity.
Maybe something appealing about working from home.
Being able to spend time with my wife, in the middle of the day. And I mean like quality time, not time. But yes, quality time.
Sounds amazing. Name something you'd hate to find swimming around in your bathtub.
A snake. I'm deathly terrified of snakes.
It's the second snake of the day. So thank you, Rohit.
Thank you.
Thank you. So that's amazing. So yeah, thank you for all the information. It's been super, super interesting for me. And I know it's going to be super interesting for our listeners because, it's great to learn about a new subject.
Thank you. Thank you for having me. I really appreciate it.
And contact, how can people stay in touch, reach out, and learn more?
Sure. So, you can go to assureful.com. That's ASSUREFUL.com. Get a quote, try and understand what your liability is with your products. You can reach out to me on LinkedIn. I'm Rohit Nair on LinkedIn, or RN9, if that makes any sense, the number 9. And so, just love to hear from everyone and support whoever needs the support.
Yeah. Thank you so much. And you're adding massive value to the industry. So thank you for being here and thank you for sharing. And that brings us to the end of our episode as well. So thank you, Rohit, for joining us. I'd like to thank everyone that's watched or listened to tonight's episode. And as always, thank you for listening to the Amazon Strategist Show. If you enjoy the show, please review us on whatever platform you're watching us on. Give us the little thumbs up on Spotify, Google Podcasts, and come back next week for another discussion with our next guest. So thank you for being here.